It's the morning drive. This is the fine print, our legal section on Mirror Business FM. We're breaking down legal issues, looking for the answers behind the headlines. So, rising tensions in the region, growing disruption to flights, to trade, to supply chains potentially. Lots of businesses asking similar questions. Does this trigger force majeure, and will insurance cover any losses that we might be facing? What companies need to know about force majeure clauses and business interruption insurance? That's next. And to discuss it is Raymond Kisswany, the partner at Davidson and Co. Raymond, good to have you on. Glad to see you safe.
Hey, here. Thanks very much for having me. I look forward to hopefully next week being in the studio with you again, not doing it over Zoom. It's a serious situation, but it's a controlled situation, and I'm very happy to be in the UAE even during this time because it's controlled and there's no need to panic.
There isn't. Raymond, let's start with the term force majeure. I want to start with the definition ahead of the discussion. What does force majeure mean?
Yeah, so it's an interesting sort of topic. I mean, at a high level, force majeure is about the inability to perform. It's about non-performance.
Right.
So when something outside a party's control prevents them from doing what they are contractually obligated to do, what they have promised to do, that is what is quote unquote force majeure. Most of it is a beast of contract, so it really depends on what the contract says about how force majeure is defined. If the clause is vague or missing, UAE law has its own concepts under the civil code that apply, particularly where performance becomes impossible. And it has to be not just because it's inconvenient or expensive; it has to be impossible to perform. So typical force majeure events would include things like war, hostilities, terrorism, any civil unrest, government restrictions, embargoes, even things like natural disasters and epidemics are usually kind of confined within the scope of it. But the key is that if your contract has a force majeure clause in it, then no two clauses are going to be equal because some can be very broad and some can be very narrow, requiring specific triggers. So that's kind of the general scope of it, I would say.
Okay, so in the context of the current escalation, the current disruptions that we've seen here across the Gulf, what triggers might parties argue constitute force majeure?
Yeah, so it would have to kind of fall into certain areas, but I think the most common arguments that we are seeing depends on the industry. So things related to government or authority actions, for example, the airspace restrictions, any additional port controls, any export or import restrictions. If there's going to be enhanced inspections, for example, any security derivatives, anything that effectively legally blocks movement or performance of what a party is obligated to do. We also have things around closures or unavailability of logistics routes. Obviously, with flights being suspended, so that would not just be of individuals, but also of cargo being able to fly in and out. And we obviously haven't seen that yet, but there's things that would go in terms of, for example, sanctions or compliance restrictions. I mean, years back when there was the embargo with Qatar, for example, that was one of the issues. So it's really important to point that disruption alone doesn't automatically equal force majeure. The real question is that it has to prevent performance. It's not about the performance becoming slower or more expensive or more painful for a party.
Okay, am I right in thinking that under Article 273 of the UA Civil Code, a contract is only cancelled if performance becomes impossible. And if that's the case, let me give you a hypothetical. Does the current situation, say, in the Straits of Hormuz meet this bar if a company can still ship goods via the Cape of Good Hope, for example, even if it is more expensive to do so?
Yeah, that's a great example. So there's two things. So one is that clause is there in the civil code, and that applies if your contract is silent on force majeure.
Okay.
If your contract includes a force majeure clause in it, then that trumps that clause. So parties can effectively define force majeure how they feel like. But in the example that you just gave, I mean, that's a perfect example because the two parties could have a clause where when they price things, for example, they price it as going through the Strait of Hormuz. And with the current situation, they can't operate that way, but there are alternative routes to them. Those routes might be significantly more expensive. They might be inconvenient. They might cause delay, etc. But you can still meet your obligations by doing it. So it probably wouldn't count as a force majeure event in that situation.
Okay, so force majeure, it has to be unforeseeable, doesn't it? How do courts or arbitrary tribunals assess whether a particular event was foreseeable or unavoidable for the purposes of force majeure?
Yeah, there's usually three things that courts or arbitration tribunals look for. One is, as you mentioned, is that it has to be the foreseeability at the time of contracting. It's not that could something happen anywhere, but it has to be realistically, was this type of disruption within the risks that the parties should have priced for or planned for when they were entering into the contract. They look for causation. Did this event actually cause the failure to perform? Were there any pre-existing issues, such as, for example, cash flow or supplier problems, internal delays that were existent before the event occurred, and the party's now trying to use force majeure as an excuse, as a shield. And the other one is what steps did a party take in terms of mitigating the losses? Could the party have performed another way? For example, the example that you said, could they have taken an alternative route? Could they have substituted suppliers? Could they have done partial shipments, different payment channels, for example? All of that without trying to turn the contract into something entirely different. So it's rarely a philosophical debate. It's very evidence driven in terms of the event itself, the notices that were done, and any kind of mitigation routes that you can do, and a clear timeline. Because what courts and tribunals are trying very much to do is to keep the contract alive if there was a way to perform it. What they don't want is parties to be able to just very simply put their hands up and say, this is becoming too difficult, this is becoming too expensive for me, I just don't want to do it anymore.
When it comes to business interruption insurance, what are the common exclusions that might come into play, Raymond, when we have a geopolitical crisis similar to the one that we're faced with now?
Yeah. I mean, we saw a great deal of this during COVID across multiple jurisdictions, because obviously there was a significant business interruption for a good long period of time. And I think this is where business expectations often clashes with legal reality, because many businesses assume my business is interrupted. They assume that business interruption insurance means my business is interrupted, therefore my insurance should pay me. And unfortunately, it doesn't really work that way. The very, very common policy wording that you see in the vast majority of insurance policy is what is known as war risks. that is typically very broadly drafted, and you find things related to war, things related to terrorism, things related to sanctions will often be excluded from the insurance policy, which I think is one of the really amazing things that's happened, because I'm sure with the news that the UAE government is going to be effectively paying for and making sure that those that are in hotels that have flights that they will be compensated for it. Because even if you had travel insurance, that's unlikely to have that's likely to have a war risk exclusion to it. So
Right.
the other kind of big one that you often find in a lot of business interruption coverage is they often want physical damage to insured property rather than just a closure. So it's a beast of contract, that contract being your insurance policy, and it's important to kind of look at that before you enter into the policy, and also what are the policy wording and what is the interruption that you face.
Well, it's interesting that you bring up, the way things are worded. Are there specific policy wordings or perhaps endorsements that could make coverage more likely to respond to conflict related losses?
Absolutely, and this is where things. And literally, there are cases that will turn on sort of one or two words sometimes. A few examples that can really materially improve the chance of cover is how far the political violence or terrorism or war extensions, because sometimes you might have a separate policy altogether that is called a war risk policy. How the policy defines things like war, riots, civil commotion, etc. And a lot of time it's with business interruption, you have things about denial of access or prevention of access for the business, and what does that mean? Um, there are many other things such as kind of contingent business interruption that will be under a separate policy, or things related to supply chain. The kind of cautionary tale is that two policies can both say business interruption on the front page, but be completely different actual products once you read what triggers it, what defines it, what limits it, and what excludes it.
Um, Let me ask you this. War exclusion clauses. I'm under the impression that most business interruption policies exclude war and warlike operations. And when you have a situation where there is no formal declaration of war between states, how do insurers define, how would you define February the 28th, for example?
Yeah, that's a great question, and war, terrorism are usually found in virtually almost all insurance policies, not just business interruption. Believe it or not,
Okay.
I think a few people might be a bit shocked if they start reading for example, their car insurance as to what exclusions are there.
Mm.
So yeah, it's very interesting because oftentimes what you'll find is very specific wording where insurers will slip in there that war, hostilities, civil unrest, etc., whether declared or not, to kind of make sure that it doesn't have to be a formal declaration of war in the kind of the old-fashioned sense that there was a declaration of war passed by a parliament or a Congress, etc.
Mm.
So a lot of insurers try to provide those exclusions as broadly as possible as to what counts as war and hostilities, and thereby requiring businesses or even individuals in some cases to be able to effectively purchase a separate coverage that is specifically a war risk coverage.
How should companies approach risk allocation in contracts, Raymond, going forward, given the heightened kind of sense of geopolitical instability and volatility that we're facing at the moment?
Yeah, I mean, like I'm not a huge fan of the word unprecedented because I mean
Sure.
history doesn't repeat itself, but it often rhymes. And I think you kind of have to take a bit of a step back with these things. Um, I would say treat the volatility and the hostilities that are going on as a baseline rather than just a rare exception. Practically again, it kind of goes to not relying on generic, repetitive boilerplate force majeure clauses that you're just kind of constantly using from one contract to the next. Um, you know, decide up front what happens if the shipping routes are disrupted. What happens if airspace closes? What happens if sanctions changes? If payment methods are impacted. I mean, we have seen it over and over again. It's not just for Dubai or for the UAE or for this region, but I mean, it was just 6 years ago that we saw what happens when the entire world shuts down. We saw it 2 years ago when we had the unprecedented rain, how the world can shut down. So kind of have a clear risk allocation framework about who would bear the extra freight costs, who decides rerouting, what are the delivery windows in terms of their flexibility, what happens to pricing, how can you terminate, because it's not just important to kind of have the boilerplate force majeure clause, because again, remember, force majeure is about impossibility. So build that in, but also build in the risk allocation of if it becomes too difficult for me to perform this contract, who's going to pay, who's going to operate, who's going to be make a decision, and how do I terminate this contract legally? So I think importantly, aligning contracts with a real operational plan that your business continuity plan says you can source from supplier B in 10 days, for example. Your contract doesn't lock you into impossible timelines and punitive damages with no relief.
From a drafting and a negotiation standpoint, what best practices would you recommend to corporate counsel around force majeure and also interruption risk?
Yeah, I mean, there's a number of sort of best practices that consistently move the needle. I think where parties have a proper think about things before they just kind of use boilerplate language, then that really helps. I think uh, defining the trigger event clearly, prevents versus hinders versus delays versus impossible performance. Those are three very different standards, and defining them well works to businesses.
Mm.
Um, Understanding how the notice mechanisms are going to work, making sure that there is fast notice requirements, what is required in the detail of those notices, ongoing updates between the parties, because a late or a vague notice is how you end up losing valid claims. Making sure that what your mitigation obligations are going to be, specifying what reasonable steps means within the contract, kind of again going through things like alternative routes, substituting goods, partial performance, etc. Um, and what the consequences are. What the suspensions are, what the extensions of time are, what the cost allocation is, what termination means. I mean, there's so often contracts that are completely vague or missing termination, and then you end up in a way where neither side can get out of something when the situation changes. So there's a number of things, but I think that those are really key things. It kind of just goes to the root of it of treating the contract as a living document rather than kind of a stationary document at the time that you sign it.
That's so important to remember, isn't it? It's far more than just bubbles in the ether, if you like.
Exactly.
So
Because the situation changes so often,
it does.
and you have no idea. I mean, who would have thought that on Saturday that this was going to happen and that this was a likely event? So
Mhm.
kind of taking not necessarily every single situation into consideration, but having alternatives of if a situation changes.
Um, I keep kind of pointing this out. We're not even 2 days past the weekend that was, but I am interested in this documentation and evidence. What should insured parties be preserving at the moment, if indeed there is a need to support future claims?
Yeah. Well, I think being very key to think about that you're building a clean time-stamped record of two very important things: causation and quantum.
Mm.
I would preserve things, I mean, depending on your business and your contract, but official notices, for example, that airlines or port receive, authority circulars that are official from government authorities, carrier confirmations, route restrictions. So that kind of notices that were there. Maintain a timeline, a time frame of when you became first aware of things, what decisions you took, what alternatives you tried. Um, the regular correspondence and communication that you kept with your suppliers, your customers, etc., about the delays, the cancellations, the substitutions, um, and then we go into things about cost, about quantum. Is what did the revised freight quotes, the warehouse and the spoilage that occurred to things that will spoil, overtime for workers, alternative sourcing costs, etc., and all the mitigation steps that you took, showing that you didn't just kind of put your hands up in the air on Saturday and said, "Oh, this is getting too difficult." What were the reasonable steps that you took to try to work around the difficulties? Um, a key sort of insurance point is notifying your brokers and your insurers as early as you can, even if the claim is uncertain, because you want to make sure that you get in there and you provided notice as soon as you were possibly aware that there's going to be an issue.
Finally, very briefly, Raymond, how can, let's imagine multinationals for a moment, but how do you balance legal remedies with commercial relationships when invoking force majeure?
Yeah, I think really the best that companies can do, whether they're multinationals or not, is really treating force majeure as a managed escalation rather than just a legal grenade that they can throw around.
Mm.
I would sort of usually like to see that you start with a commercial notice. These are the facts. Here's the impact. Here's our mitigation plan. That then kind of it sets the record straight as to what you learned, that you were quick about informing people, and these are the reasonable steps that you're taking. Offering options, for example, if you can be able to do a partial performance, if you can substitute routing, if you can revise delivery windows, temporary pricing adjustments, and and using those kind of formal force majeure notices strategically, being accurate, being compliant, being measured, rather than just aggressive and putting your hands up. Um, and keeping the relationship channels open in parallel with legal steps that you're taking between your customers and your insurers, because even when you're legally right, the real world question is, do you want to keep this counterparty for the next 3 years, or not? There's a way to protect your legal position without poisoning a good relationship for your business.
Raymond Kisswany is a partner at Davidson and Company. Great to have you on the show once again, Raymond. Thank you for joining us. Stay safe.
Thanks very much. You too. And look forward to seeing you in the studio, hopefully on Tuesday.
We will do. That is the fine print for today here on the Morning Drive here at Mirror Business FM. We're trying to cover the stories that matter as much as we can right now. Morning Drive is back tomorrow morning here at Mirror Business FM. Don't forget, you can find us. You can find the news on the website, mirrorbusiness.fm, and also across social media as well.